5 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Labour market in focus. Markets eyeing more employment data today with challenger job cuts and initial jobless claims on deck. Setting up the chessboard, Treasury Secretary Scott Bessent under consideration to add NEC director to his list of responsibilities if Kevin Hassett is nominated for Fed chair. And in AI, China's Cambrian aiming to replace Nvidia as Jensen Huang expresses doubt China would even accept Nvidia chips in the event the US relaxes restrictions. So let's have a look at these markets as we head into the Thursday session. Fractional gains for the S&P 500 and Nasdaq 100 futures. We did see a couple of tenths of a percent yesterday of a gain for the S&P, 0.3% on the Nasdaq 100, but that belies the churn underneath the surface. As Ed Yardeni puts it, we're very close to records on the S&P still, despite, quote, lots of confusing stuff, right? And that's everything from the Federal Reserve and what it might do next week, what it might do beyond that into next year, to the AI race, which he likens to frogs leaping each other. Let's take a look at the bond universe because we're not seeing too much movement in the 2-year yield. It is anchored to 350. That's even as we saw the 10-year yield dip pretty well below 410. It's now back above 408, and that 30-year yield holding on to almost 4.75%. We also have Bitcoin still above 93,000 today. All right, let's get to some individual movers. Over to London and Valerie Teitel. Valerie.
Good morning, Ivani. Let's start with a check on Salesforce. This is the largest maker of CRM software, higher in pre-market trading by nearly 2.5% as it touts AI adoption. It came in strong with a revenue forecast for the current quarter, making analysts rethink whether the adoption of their AI tool called Agentforce is going to be better than expected. The company was touting a near 300% rise of the use of its AI tools on its platform. They also announced a tie-up with Anthropic, so Salesforce up 2.4% on the back of that news. Next, let's move to Snowflake. This is a cloud-based software company. It's not all positive when it comes to AI trade. Bonnie, Snowflake is in the red, down 9%. Their margin outlook has been fueling some concerns that their AI tools might not be as profitable as hoped. Now, this company has also announced a $200 million tie-up with Anthropic to put its Claude suite of AI models onto its software, but that good enough news wasn't enough to tempt the, I guess, the more disappointing news on its margin outlook. Next, let's move on to Costco, another guide on the consumer for the month of November. Their comparable sales coming in weaker than forecast. Vonnie, shares of Costco down just over 1% in pre-market trade. A lot of focus on the consumer, Vonnie, heading into the holiday season. We want to know if that consumer is healthy.
Exactly, and we get Dollar General before the bell today and Ulta after the bell, among other companies reporting. Valerie, thank you so much. That's Valerie Teitel. And coming this hour, we're going to be speaking with Malek of Siebert on AI's impact on yields. Let's turn back to our top story. With Kevin Hassett as the front runner to become the next Fed chair, President Trump's aides are discussing giving Treasury Secretary Scott Bessent the top National Economic Council job in addition to his current position. Bloomberg's Jill Deesis joins us now for more. So, Jill, obviously this is all hypothetical for now, but if Bessent advises the president anyway, would it make more sense for him to also have the NEC position or to actually be at the Fed where he could just implement monetary policy?
Well, Bonnie, it's all hypothetical for now, but I think there's a couple of key takeaways to really look at here when you consider what it would mean for Scott Bessent, the Treasury Secretary, to then ultimately take up this National Economic Advisor post. I think the key part of this is really that this would effectively give him an office in the West Wing. So, I mean, really positioning him closer to that center of power, really giving him the opportunity to have the president's ear in that, really sort of critical way. So if you're looking at this as a way for Bessent to really kind of consolidate his power and influence within the administration, I mean, it's hard to, go much further than saying, you basically get an office in the West Wing. So I think that would be a really, really, critical piece of this to think about. I think, the other thing, too, when you're looking at the Trump administration sort of more holistically is that it's really not uncommon within the Trump administration, particularly Trump 2.0, since he came into office this year, for a lot of these, really key level advisors or cabinet officials or some such to hold multiple positions within the administration. You look at Marco Rubio, for example, Secretary of State. He's also running the National Security Council. So Trump does seem to be fairly comfortable with the idea of, multiple of his key people kind of holding these key positions sort of throughout the administration. And I think really in Bessent's case, it really does kind of show you that if this does end up becoming a reality, which again, have to stress this is hypothetical. Also just, the entire idea that Trump has finalized, some of his picks for certain positions. Trump can always change his mind at any time, but it does kind of give you that idea that, he would have, an even broader remit to sort of, push through, a lot of really critical, financial and economic policy for the Trump administration.
Yeah, and to your point, I should add that he's also, quote unquote, acting director of the Consumer Financial Protection Bureau, although he ordered all work there to stop as soon as he became acting director. And he also has a role in this potential sovereign wealth fund that's getting built up, right, Jill? So he's doing a lot already anyway. What is the NEC director responsible for beyond just advising the president?
Yeah, well, I think, it's kind of diminished a little bit or sort of shifted, I'd rather say, under, the second administration. Obviously, Kevin Hassett fills that position now. I think historically you're looking at a position that really did have quite a lot of say and sway over economic policy within the administration. A lot of what Kevin Hassett has done in his position, in that post is really kind of being one of the chief advocates for a lot of the Trump administration's economic policies. You see Kevin Hassett a lot on television, sort of arguing for, sort of tariff policy throughout this year. So it's really become more of that kind of booster position. What it would mean for Bessent, who again is already Treasury Secretary, to also hold that post. I think you can argue that maybe, there's a little bit of a difference there, or maybe you sort of, bring that into a different perspective. But I would say, generally you are looking at something that, does have, presumably considerable influence over economic policy.
Jill, thank you so much for joining us this morning. That's Jill Desus there. Well, the bond market staying cautious on this potential pick. PGIM's Greg Peters joins the chorus doubting Hassett as the best next Fed chair. Take a listen.
Does he have the credibility within the committee to drive consensus? And so we don't know that answer. I don't think he has that credibility. I think that's what the bond market is telling you.
Joining us now is Bloomberg's Ven Ram. Ven, this is not just Greg Peters. We had an FT article yesterday. We've Neil Dutta out today saying not only, is the bond market not credulous, but also this man is worse at forecasting than Governor Waller. He doesn't have the practical background in markets of a Scott Bessent, and he's not as good on TV as Scott Bessent. We can leave that one aside. But would there be potential implications? Would there be market ructions if this were to all occur?
Morning. Yeah, I think that the markets are kind of comfortable with the idea that interest rates are going to go lower broadly next year. And if you look at the data print that we've been getting of late, it points to a softer labor market. That would mean that, pretty much most of the people on the FOMC who are voting next year are likely to say yes to rate cuts, further rate cuts. The question comes down to how much further in rate cuts is the question. And that is where Kevin Hassett's persuasion skills will be put to the test. Now, what we know from the September 2025 Fed dot plot is that 5 members were already convinced that interest rates need to go below 3%. So that is much more than the markets are pricing in. The markets are pricing in a terminal rate of 3%. So there are 5 members of the committee who think that we need a rate below 3%. So it means that, Kevin Hassett has to just work on a marginal group of people to persuade them to cross over the line. And if the labor market points to continued softness, I think he will get there without too much trouble.
OK, so he might be able to get a consensus, but that would be in quote-unquote normal times or normal-ish times. What about Neil Dutta's point that if there were to be a financial event, and we've been talking about a potential bubble and potential financial events on the horizon, that Kevin Hassett might not be the best person to lead the US economy through that in terms of monetary policy?
I think a lot of Fed chairs learn on the job. I mean, we are not in an era where we had Greenspan and Ben Bernanke, who are kind of preeminent economic intellectuals to lead the Fed. We are now in a situation where we are getting more people who are not mainstream. I mean, Kevin Hassett, to his credit, is a mainstream economist. If you look at Jay Powell, he wasn't an economist by training. He was a lawyer by training. So we have to give him the benefit of the doubt. We do not know what a hypothetical situation may provoke some kind of a response. So I think it's a bit too premature to discuss that.
All right, Ven, thank you so much. Great context there. That is Bloomberg's Ven Ram. In China, the yuan weakening against the dollar after the PBOC set its daily reference rate at a level significantly weaker than estimates. It's really trying to slow the currency's gains, which we've been seeing for a long time now. So how and why is China pushing back against a stronger yuan? Joining us now to discuss this, we have Paul Dobson. So, Paul, China obviously came out with a big signal to the market today. Look, we are not going to let this appreciation continue indefinitely. But can it, does it have the financial firepower to continue setting the reference rate weaker should it need to?
Yeah, hi there, Bonnie. Good morning. So exactly as you said, this move seems to be to slow the yuan's gains rather than to completely force a turnaround. And yeah, China can keep going at this for as long as it likes. But what it seems like it wanted to do is really tap on the brakes a little bit here and send a signal to the market. And it does that by using the reference rate, which controls the sort of levels at which the onshore yuan is allowed to trade. We've also seen some evidence of pushback against the currency's gains becoming too rapid in other ways as well. For example, state-owned banks have been out there taking a position in the market that's counter to that underlying trend in order to, again, slow it down. So it's fairly normal tactics from the PBOC, but it's something that we haven't seen in this direction for quite a while. Quite a lot of what they've been doing recently has actually been propping up the yuan. So the idea now that they're starting to slow down its gains, on the other hand, is a sort of different direction for us than what we've been used to over the past few years.
Now, China would like for there to be better sentiment towards its assets, right? And that's another reason it's doing this. It would also be quite happy if the dollar were to continue to stay weaker. Can China engineer those two things, or is that really in the market's hands? The market will tell China what it's happy with.
Yeah, it's a little bit of a push and pull back and forth. And so I think that you're right that the allowing the yuan to appreciate does send a positive signal to the world about the value of Chinese assets and encourage people to be pouring more money back into China. Remember, over the last few years, we've seen a really big exodus of international money from the nation and the nation's assets. So allowing that appreciation does give that sort of sign that China is open for business and willing to attract more investment. What it doesn't want is exporters, which are holding a lot of dollars offshore, suddenly repatriating all of their money at once and causing the yuan to gain too rapidly and causing some sort of a shock to the economy. It doesn't really need a massively stronger currency, but it does like the idea that there's money pouring into the stocks and pouring into the bonds as much as possible. And we've certainly seen that in terms of efforts to internationalize the yuan to sell and raise cash abroad too. You're right, the dollar obviously plays an important role in this as well, and it's very convenient that it's generally been weakening this year, not strengthening. That means that it makes it easier for China to sort of ride that kind of wave. We've got most likely a Fed cut coming up later on this month, and maybe some more into the next year as well. So if that does continue to keep the dollar under a little bit of weakening, then China, all things being equal, would be able to allow the yuan to keep gaining steadily, but not at a runaway pace.
All right, Paul, thank you so much. That is Bloomberg's Paul Dobson. Now to other top stories trending on the terminal this morning. German Chancellor Friedrich Merz and his ruling alliance with the Social Democrats face another challenge after a group of younger CDU lawmakers rebelled against a pension bill due to go to a final vote in the Bundestag Friday. The Social Democrats' co-leader hinted this week that if the pension bill doesn't make it, it could spell the end of the coalition. French President Emmanuel Macron pushed for more Chinese investment during a meeting with Chinese leader Xi Jinping. Macron said Europe, including France, needs a clearer framework to attract more Chinese direct investment. He further warned that China's growing trade surplus is becoming unsustainable. And key members of Japan Prime Minister Sanae Takaichi's government would go along with the Bank of Japan if it decides to raise interest rates this month. The comments come amid heightened speculation that the BOJ will increase the benchmark rate to 75 basis points at its next meeting, December 19th. Coming up, Meta facing a full-scale antitrust investigation by the European Union over tools it's using in WhatsApp. More on that next. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Meta has now been hit with a full-scale EU antitrust investigation over its use of AI features in WhatsApp. Bloomberg Intelligence tech analyst Tamlin Bessent joins us now. Tamlin, what do we know about this investigation so far?
Yeah, thanks, Bonnie. So far we know that the EU is launching a full-blown antitrust investigation. I think it's important to note that this is under those existing long-standing competition rules. This is not seemingly being brought under the new Digital Markets Act, which the EU put into place last year. Why I think this is as important is, although the DMA was supposed to be sort of a fast-track way to enforce these new set of rules against large tech companies, it's also relatively inflexible. And I think the EU bringing this under sort of the existing long-standing antitrust rules is maybe a tacit acknowledgement that that DMA is not really suitable as it's currently being enforced to really regulate the AI sector. So I think that's a really interesting aspect of this investigation as we're just beginning to learn about it.
Absolutely. Well, the investigation itself seems to be targeting Meta AI being used in WhatsApp. Meta AI, as I understand it, has a rollout beginning March, no? So this is sort of preempting that in a way?
Yeah, so Meta had already sort of been slowly rolling out those AI features, at least in Europe, and part of that was because uncertainty over these overlapping regulatory burdens that the EU has placed on large tech companies. Now, this goes back to sort of the privacy rules, general data protection regulations that make it sort of awkward for Meta to combine data across its various platforms. So I think what the EU is doing right now is preemptively looking to thwart Meta from using its dominant position in WhatsApp. And again, WhatsApp in Europe it is the dominant messaging platform. It has much larger market share than it does in the US. And I think what the EU is trying to do is to thwart it from using that dominant messaging platform to really block out competition in the AI space.
Yeah, I mean, twice already the EU has come for Meta just this year alone, right? And Meta has had to pay in the order of, almost €1 billion, it looks like, for various infringements of EU rules. But the US President Donald Trump doesn't love these US rules, right? He thinks that they are unfairly targeting US companies. Could we expect some blowback from the Trump administration?
Yeah, certainly. Sort of the EU enforcement of their rules against big tech companies has been an issue for the Trump administration, and it keeps popping up in these sort of delicate trade discussions. And I do think that we should expect some blowback, at least some commentary from the Trump administration over the unfairness of the EU continuing to go after tech companies. But again, I think what you can view from this is EU regulators must think that AI is going to be a very rapidly moving market, and they need to act quickly to really try to maintain some competitive balance in the messaging and AI platform. But I do think certainly we're going to expect some blowback from the Trump administration.
Tamlin, thank you so much. We'll check in with you again on this story. That's Tamlin Bessent of Bloomberg Intelligence. Coming up, President Trump to ease Biden-era fuel economy rules. That and what else is making your headlines in your front page news next. This is Bloomberg.
Going toe-to-toe against anyone, the American technology industry has nothing to fear. We are mighty, we're fast, we're inventive, we'll take anybody on. In the case of China, we shouldn't concede the entire market to them. They're formidable, but conceding that entire market, we ought to go compete for it.
NVIDIA CEO Jensen Huang speaking at the CSIS conference in Washington yesterday. Now it is time for your front page news. First up on the New York Times' front page, President Trump saying he would weaken Biden-era mileage standards, calling them a scam. He said he threw the weight of the federal government behind vehicles that burn gasoline rather than electric cars, gutting one of the country's most significant efforts to address climate change. Next up, the Washington Post reporting Now, the Pentagon's watchdog finds Defense Secretary Pete Hegseth violated Pentagon protocol by using a personal device to share sensitive generational details on Signal, the unclassified messaging app. Hegseth shared specifics about strikes in Yemen before those strikes began. The Post says the Inspector General recommended better training for all department personnel on the issue. And finally, on the front page of the Wall Street Journal, a report that Sam Altman explored a deal to build a competitor to Elon Musk's SpaceX. The Journal says Altman reached out to at least one rocket maker, Stoke Space, and the discussions included a proposal for OpenAI to make a series of equity investments and end up with a controlling stake. According to Journal sources, the talks are no longer active. Let's take a look at these markets now, a few hours before the open. So we are fractionally higher for S&P 500 futures. Remember, we had fractional gains yesterday, but there were some big moves beneath the surface, not least chip companies and energy companies, with nat gas well above $5 at one point. The Bloomberg Dollar Index unchanged, and we have the 10-year yield still under 410. The 2-year yield, by the way, hanging out at 450. So that curve steepener trade, obviously, still in place. Coming up, the AI race heating up. We're going to be speaking with Siebert's Mark Malek. This is Bloomberg. It's 5:30 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Labour market in focus. Markets eyeing more employment data today with challenger job cuts and initial claims on deck. Setting up that chessboard. Treasury Secretary Scott Bessent under consideration to add NEC director to his list of responsibilities if Kevin Hassett is nominated for Fed chair. And in the AI space, China's Cambricon aiming to replace NVIDIA as Jensen Huang expresses doubt China would even accept those NVIDIA chips in the event the US relaxes restrictions. So lots of hypotheticals out there. What is not hypothetical is that these futures are pointing to a green open, albeit barely. We did have some gains yesterday, and the S&P does remain near a record. It added another 0.3% yesterday. The Nasdaq 100 was up 0.2%. So again, you could say we're struggling for direction, or you could say we're kind of hanging out at those highs, even with all of the confusing stuff, as Ed Yardeni calls it, percolating. So we have a lot of questions related to the Fed, what it does next week, what it does beyond that, and who actually leads it next year. And the AI race accelerating as well. We're going to be speaking about those bonds that are needing to be financing the AI race in just a moment with Mark Malek. But as you can see, in terms of treasuries, the 2-year yield is above 350 now. The 10-year yield, though, still well below 410, and the 30-year yield below 475. Let's get to some individual movers now with Valerie Teitel in London.
Good morning, Ivani. Let's start with a check on some stocks moving after earnings, one of which is Salesforce, up just shy of 2%. This is after they gave quite a rosy outlook for revenue for the current quarter, making some analysts believe the adoption of their AI tools could come in better than expected. Their AI agent called Agent Force, they saw some growth of over 300% year on year in the previous quarter. But this AI adoption theme, especially in these incumbent software makers, has been something key for their success. Salesforce touting that success in their earnings. The shares are up just shy of 2%. Staying with the AI theme, moving on to the cloud sector. Snowflake, this is a big maker of software used in cloud services. These shares are sinking down nearly 10% in the pre-market trade. They did give a margin outlook that has been fueling some concerns of profitability, especially within the cloud space. However, a positive note for them, they did announce a tie-up with Anthropic, a $200 million investment in order to get those Claude AI models, on to their software. So Snowflake in the red, down nearly 10%. Lastly, let's move on to a big box retailer, Costco, out with comparable sales for the month of November. Disappointing estimates. We're seeing shares of Costco down just over 1%, but we do have an eye on the consumer as we are headed into that busy holiday season. Costco pointing to a weak number for November sales. Bonnie?
And a few more retailers out today. Valerie, thank you so much. Valerie Teitel there in London. So the AI race continues to heat up in China. Cambricon planning to more than triple its production of AI chips in 2026. It's aiming to wrest market share from Huawei in China and fill a void left by NVIDIA's forced exit. Following a meeting with President Trump, NVIDIA CEO Jensen Huang expressed uncertainty about whether China would even accept those H200 chips if the US does indeed relax restrictions on sales. Joining me with the latest is Bloomberg Tech Europe anchor Tom McKenzie. So Tom, I have to quote Ed Yardeni. He calls this AI race a race among leaping frogs today, and that's what it is. How is Cambricon trying to leap over NVIDIA, as it were, and also Huawei?
Yeah, look, well, you would imagine that this latest detail out of Cambricon is going to be used as fuel for the argument from Jensen Huang and those on the side of this red-hot debate right now in Washington between the national security hawks and those who say that US tech has to be playing that role in terms of carving out market share, dominating the market for AI hardware and software solutions. And no doubt Jensen Huang and NVIDIA will be looking at this news around Cambricon and saying, we told you so. The Chinese are competing and they are starting to take some market share. Cambricon wanting then to triple the number of chips that they produce in 2026. One of their key clients is already ByteDance, so the maker, of course, and the company behind TikTok. They're hoping to sign deals with the likes of Alibaba, according to our reporting. Look, it's worth noting that Cambricon is one of the leading domestic chip designers in China, alongside HiSilicon, which sits within the Huawei business. But they are still significantly behind, on some analysts' estimates, about a decade behind where NVIDIA is in terms of the most sophisticated AI chips, alongside all the networking gear and software gear that goes with it. So there's a way to go, but it's a reminder that the domestic chip companies in China are taking advantage of this push to build out their market share, given that NVIDIA does not have any significant exposure to that market right now. And it aligns with the policy of Beijing, who have, of course, been jawboning their own AI companies and pressuring them to use domestic chips versus those from NVIDIA and AMD.
Yeah, exactly. Now, China keeps teasing that, it didn't want those chips in the first place anyway. This was after President Trump said China couldn't have them. So, is there some truth to what Jensen Huang is saying that, we're not sure that China would take them? Or is it just too attractive to have those NVIDIA chips that, as you say, are just more advanced right now?
So I think the test point comes with what kind of chips NVIDIA would be offering into the Chinese market. It seems like the debate continues around whether the H200 chip that NVIDIA produces will at some point get access to the Chinese market. President Trump appears to be weighing that with his team, and maybe that's a decision he comes to before he visits Beijing next year, as is planned. Now, the H200 would be the most sophisticated chip that NVIDIA has shipped to date into the Chinese market. They have been able, with export controls, to ship until recently the H20, but that is a very much reduced capacity chip. The H200 is a generation behind the Blackwell, but still is leaps and bounds ahead of what China is producing. So would they turn their backs on that chip if it was offered to them? That would be hard for many of the key AI players in China to do. But again, that question at the moment remains mute because the H200 is not able to access the Chinese market. But we know that NVIDIA and Jensen Huang are pushing for that. So that could be the tipping point. And that there's also a potential here that China is cutting off its nose to spite its face. It may fall back in terms of AI innovation if it insists on its AI companies using domestic chips that are still at least a generation behind their US counterparts.
And Tom, just on Meta, I want to ask you about this European Commission investigation into it using its AI tools in WhatsApp. I mean, this hasn't even really rolled out properly yet. So does this mean that Meta might have to make some changes and roll back those Meta AI tools in WhatsApp?
Yeah, and look, Meta is behind in the race, particularly when it comes to these AI models, but it has introduced and integrated some of these AI services into WhatsApp, which, by the way, is much more popular in Europe and here in the UK than it is in the US. And that's probably why the EU is taking a look at this, because of the anti-competitive nature of the way that this technology is being embedded into WhatsApp. That being the allegation, of course, or the potential allegation from the European Commission. Of course, Meta have pushed back on this and say that this is flawed. And I'll quote from the Meta statement: "We strongly reject these unfounded claims." It's worth noting that the EU has hit Meta with fines of close to $1 billion just in the last 18 months. So the spotlight in terms of the regulators in Brussels continues to be on Meta. They're concerned about the anti-competitive nature of AI being integrated into WhatsApp and the fact that it could be freezing out other competitors. Again, Meta pushing back on this.
Tom, thank you so much. Bloomberg Tech Europe anchor Tom McKenzie. Mark Malek of Siebert flagging that Silicon Valley's AI ambitions, well, they're posing a new problem for the 10-year yield. He writes, quote, You have two forces pressing on the same pressure point. On one side is the government floating billions of dollars in new Treasury issuance. On the other is big tech about to join the party with record corporate issuance to fuel an AI supercycle. I'm pleased to say Mark joins us now. He's Chief Investment Officer at Siebert Financial. Mark, I'm tempted to ask, what's the problem here? You know, corporations go to the bond market for all sorts of reasons. Why not some AI build-out?
Yeah, I think it makes a lot of sense. However, it's the pace at which these bonds are going to hit the market, right? So market's already struggling with the swelling debt that is expected to come in the future to fund the federal deficit. But now you have corporations coming into the same market, essentially hitting with a big amount of supply. So it's not necessarily the amount, but it's the surge that's expected to possibly come in the next few years.
So there'll be a surge of supply. We'll see if there's appetite for that supply. And, you know, risk premia as well will reflect what the market thinks the risk is. So in a way, it might be a healthy sign, right? We will know what the market thinks these corporations are taking on in terms of risk.
Yeah, you know, the challenge is not so much the risk in this case, right? Because the companies that we're talking about are largely very healthy companies. You're talking about the hyperscalers that have probably better balance sheets than many governments. The challenge is really plainly and boringly just the supply. So it's not necessarily a risk challenge, it's about the supply challenge. Now, there are companies that are on the fringes of the AI ecosystem that are floating bonds that are a little bit riskier. And of course, we have to make sure that we get the premia associated with taking those additional risks. But the overall challenge is the high level macro pressure that's going to be on the prices and pushing yields higher.
And then, of course, you know, there's government issuance. As you say, the supply of bonds from the Treasury is just going to keep coming as that deficit just, you know, swells and swells. The market seems to have sort of put that on the back foot at the moment because there's so many concerns about the Federal Reserve. When do we start seeing that as a concern in the bond market again?
Well, I mean, you are not necessarily concerned, but you are seeing a sticky 10-year yield, right? Everyone's expecting 10-year yields to keep, you know, to come in a little bit more, and it hasn't. It's been sort of stubbornly right around that 4% range, you know, plus or minus, 10 to 20 basis points on the upside, and that really is the bond market sort of putting in its assessment on where it thinks things are going. So if the bond market were to ease up on that, we would certainly see 10-year yields come in a little bit. Of course, we have a little bit of sticky inflation, also putting a little bit of pressure on the back end of the yield curve. But it's largely all about the supply that's expected to come and the continued issuance that the government is going to have to be out there in order to fund the federal deficit.
Do you think it's going to come to a head at some point then? Because, you know, we do frequently get these warnings, and yet the bond vigilantes don't seem to sort of act up all that often.
Yeah, it's an interesting question. I mean, we did see the bond vigilantes rear their heads earlier in the year, and most of us nerds who like to follow the bond market are expecting the bond vigilantes to show up any day now, and they haven't showed up in full force. However, again, you still are seeing that sort of magical floor that seems to be under the longer end yields, and of course, you know, we have a better idea now at this point of at least we think the path of rate cuts on the front end of the yield curve, and so as that maybe changes over the next, let's say, 6 months, we'll have to see if 10-year yields ease up a little bit as well.
Sentiment around Kevin Hassett. We do seem to have some negative calls out there that this would not be the right pick for the Fed chair, that maybe like a Scott Bessent or maybe a Governor Waller or somebody would be better. Maybe the decision has been made, but of course, until it's final, we don't know. So, you know, what's your sense of how the market is accepting this potential nomination?
Yeah, well, you know, the market's a little bit jittery at this point about rate cut paths. So naturally, the market is going to try to assess whether it's going to be good or bad for rate cuts in the future. I mean, last time I checked the WIRP function on Bloomberg just earlier today, I saw that maybe there's a 97% chance of a rate cut. I think the handwriting is on the wall. I don't think whoever's sitting at the top of the Fed is going to impact that so much. I mean, the handwriting really is coming from the labor market that's showing clear signs of exhaust, right? The ADP number that we got earlier this week and the ADP NER pulse numbers that we saw leading up to this, even in this lack of government data, we're seeing signs that hopefully the Fed is seeing as well. And so no matter who's sitting in the corner office over at the Fed, I think at the end of the day, you're going to see, you know, rates are not going to change their path all that much.
You obviously think there's great value to be had then in the bond market. Where?
Yeah, that's a challenge, right? Because there are only so many people who like to buy, who can buy these types of bonds, right? So there's so much demand out there for bonds. Everyone's going to be excited to see a lot of bond issuance come out of these exciting companies, because in the bond world, there are very few exciting, corporate-based stories. So when you start to see these hyperscalers come out with bonds, people might be tempted, average folks might be tempted to jump in on those bonds. But as we suggest, that there might be some pressure on those yields. So while they might be getting yields, and again, remember, these are pretty high credit, so you're not going to get that much of a yield pickup over treasuries. So, retail investors might be putting themselves a little bit at risk because they risk seeing the bonds themselves go down.
So stay away from the AI bonds. But what about treasuries? Where on the curve would you be looking at?
So treasuries, I think there's still some value sort of in the front end of the curve at this point. I think you're seeing some pretty good yields relative to where they were historically. And if we continue to see this downward move as the Fed, even though, like I said, the warp function maybe 2 to 3 cuts next year, you have some potential upside over there too, because you will see some of those, some price increases. Let's say 2 to 5 year range at this point.
And as you say, growth stocks should pray the 10-year doesn't start reacting to AI bond supply.
Because that affects valuations of the growth stocks, and that's
Exactly.
that's the tail wagging the dog right there.
Mark, thank you so much to chew on there. That is Mark Malek of Siebert Financial. Now, 2 other top stories trending on the terminal this morning. UBS Group's billionaire clients are planning to curb allocations to private equity funds amid a global slowdown in the market. Almost a third of 87 individuals commanding 10-figure fortunes surveyed by UBS are looking to cut contributions to private equity vehicles over the next 12 months. BlackRock is halting plans to launch an infrastructure fund targeting wealthy Europeans. This marks a setback for the Wall Street giant's efforts to get more individuals to invest in its newly acquired private markets offerings. KKR has picked Abu Dhabi as the location for its 3rd Middle East office, spotlighting the growing significance of the oil-rich Gulf. The firm has deployed about $2 billion over the past 10 months in the Gulf, buying a slice of Abu Dhabi's national oil gas pipeline network and a stake in one of the largest Gulf data center firms. Coming up, another possible job for Bessent. The Treasury Secretary could be soon adding National Economic Council Director to his resume. More on that next. This is Bloomberg.
Does he have the credibility within the committee to drive consensus? And so we don't know that answer. I don't think he has that credibility. I think that's what the bond market's telling you.
PGIM's Greg Peters there casting doubt on National Economic Council Director Kevin Hassett as possible Fed chair, and that's following the latest note from Renmark's Neil Dutta echoing that sentiment. Neil Dutta has 3 reasons why he doesn't think that Kevin Hassett would be best for the job, and the bond market maybe doesn't believe so either. Joining us for more is Bloomberg's Jill Deasis. So Jill, I mean, these are some market participants now voicing their concerns. At the same time, we're not seeing too many bond jitters. Should we just, ignore the fact that there are some people out there that, don't maybe think that this is the best person for the job and that somebody else should be chosen instead?
Well, Bonnie, I think there's a couple of things to kind of put into context, particularly with some of those Peters remarks. My understanding, he's kind of talking in light of a recent report in the Financial Times that it's bond traders that have expressed some of these concerns. I think the overall picture here points to one where, what the market is really sort of looking at in terms of, it's a changing of the guard essentially at the top of the Federal Reserve, right? And there's really 2 components of this. First of all, the fact that Kevin Hassett as Fed chairman would be an unknown quantity, just, in relation to somebody like Jay Powell, who's obviously been in that position for a while. And so, there is that sentiment around whether or not Kevin Hassett actually does have, I think as Peters put it, the credibility, the ability to kind of rally the rest of the FOMC, to sort of push for certain positions. I think that that's part of it. Certainly, again, it's not just an interest rate decision. It's not just a decision made by one person. It's a decision made by the entire committee. So that's certainly a part of it. And then, the other piece of that as well is, again, just really kind of looking at whether or not This is something in terms of actually realizing what Donald Trump's, interest rate pathway ultimately looks like, whether or not that sort of raises really uncomfortable questions about the independence of the Federal Reserve. I mean, we've certainly seen over the last year, in particular, Donald Trump really kind of railing against Jay Powell in the direction of the Fed. If you are installing somebody who has, been pretty explicit about, sort of tracking with a lot of the president's views, does that raise questions about independence? So those are certainly some things that I think, we're hearing from Peters and others. But again, a lot of this is currently in the hypothetical because we don't have a Fed chair nominee at this point. And I do think that it's worth raising the point that Trump could change his mind still.
Yeah, I was literally just going to say that. I mean, it's not over until he actually announces his nominee, right? The other part of this is that we're reporting that Bessent is under consideration to also lead the National Economic Council, and that would be if Kevin Hassett were to be nominated. So again, moving chess pieces, and we don't know. But what would the National Economic Council director do that's different from Treasury Secretary? Just give us the lowdown.
Yeah, well, I think, first of all, you have to think about it in terms of a dual appointment, right? It's not just instead of Treasury Secretary, it's in addition to Treasury Secretary. And I think the key thing here is, look, I mean, the head of the National Economic Council is somebody that historically has a really big say in terms of guiding economic policy for the administration, whether that's tax policy, eco policy, that kind of thing. Under, Trump 2.0, Kevin Hassett has kind of used it as a position to really advocate for the president's positions, particularly on television. But to me, I keep coming back to the critical piece of this, particular appointment, were this actually to go forward, is that it would give Scott Bessent an office in the West Wing. So, I mean, if you're looking to get even closer to the president and really kind of bend his ear, you can really get not that much closer than actually having an office in the West Wing. And so I think that raises, some considerations here about whether that actually sort of increases the amount of influence that Bessent himself has with the president if he's got an office that's sitting right there next to the Oval one.
I mean, I feel like he has a lot of influence over the president anyway, right, Jill? And they probably talk all the time. Would he be able to talk as much to the president if he were to be Fed chair instead of Kevin Hassett, if that is the way the events take a turn?
Yeah, I mean, that's, the different consideration, right? And I think, when we're looking, in light of, all of this, I mean, Scott Bessent himself leading the, sort of leading the charge, looking for that Fed chair replacement, what if it actually is him? I think that kind of brings things into a different calculus. Again, I think the dynamic with the Fed chairmanship is different in that obviously it's not just that person, right? It's the entire FOMC that makes those decisions. So it is all about sort of persuading and sort of consolidating.
Jill, thank you so much. That is Bloomberg's Jill Desis. Obviously, we'll continue to follow this story and these multiple stories step by step. Coming up, we're going to get you set up for your trading day. More jobs data, of course, on deck. Also some earnings left. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Now, a look at what's ahead for your Thursday trading session. More jobs data with challenger job cuts at 7:30 Eastern and jobless claims at 8:15. And earnings coming from Dollar General before the bell. We also get Kroger and HP Enterprise after the market close. Plus, President Trump going to be greeting the presidents of Rwanda and also the Democratic Republic of Congo at the White House today. Some earnings movers before the bell. Salesforce up more than 1%. It gave a strong revenue outlook and touted AI adoption. Different story for Snowflake. It is suffering. And Costco down about 1% after sales missed. This is Bloomberg.